Hello, welcome back, accounting students. This is Mrs. Bloomquist, and we are moving on to Chapter 9 in accounting. This actually represents the second half or part 2 of our book. For all of the first 8 chapters in the book, we were dealing with accounting for a service-based business that was a proprietorship. Now we're going to actually be transitioning and we're going to be doing accounting for a merchandising business that's organized as a corporation. So we'll end up doing the complete accounting cycle for a different type of business. Now, corporations are set up a little bit differently. They require different equity accounts because we're looking at stock. And because we're going to be dealing with a merchandising business, you'll notice that there are some different accounts that we have in our general ledger. I'm going to direct you to page 241 in your book, where we actually see the chart of accounts for the business that we're going to be using as our example business, 3 Green Products, Inc. So you probably want to just check that out and at least kind of get a heads up about what you're seeing there. When we look at Chapter 9 is going to deal with accounting for purchases and cash payments. So the very first lesson here is subsidiary ledgers and controlling accounts. And there are a bunch of different definitions that come out in this chapter. And if you're looking on page 244 in your book, you'll notice there's a whole lot of yellow highlighter on that page where it gives you really some definitions. So I'm actually going to suggest that you at least pause for right now. Go ahead, open up your book on page 244 and get a heads up about all of those different definitions. That's really going to help you as you think about, hey, I'm going to need to know some different kinds of terms and concepts when it gets time to take my test for Chapter 9. So go ahead, pause the screen for just a minute and make sure you can double check in on some of those definitions before I go ahead and start what I'm doing. Okay, so now that you've had an opportunity to review the vocabulary, you should be in a good place to start. And one of the things we want to focus on, what are our learning objectives for Chapter 9, Lesson 1? Distinguish among service, retail merchandising, and wholesale merchandising, and that those are different types of businesses. Identify the difference between sole proprietorships and corporations. And then explain the relationship between a subsidiary ledger and a controlling account. All right, so some of the definitions. Goods that a business purchases so that they can sell, that's merchandise. So a business that is on selling and reselling goods, that's merchandising. If a merchandising business sells their goods to the end consumer, that's retail merchandising. If they sell their goods to a business that's going to go ahead and sell them again, now you're looking at a wholesale business. So wholesale means you're buying things and selling them to another business. Retail means you're buying things and selling them to the end consumer. All right, corporations. So just remember that corporations are a legal entity. They're separate and distinct from the owners of a business, and it's a different organization. Any assets or other resources that are available to the business then are called capital. When companies or businesses form corporation, ownership then is divided up into stock, and every share of stock represents ownership in the corporation. And corporations can have small amounts of stock, large amounts of stock. They can be publicly traded on a stock exchange. They can be closely held or a private corporation where a few private individuals own stock and it's not publicly traded on any kind of stock exchange. If you own stock, you're a stockholder, and the total shares that are in a corporation, that's capital stock. All right, articles of incorporation. So when companies decide to become a corporation, they file a legal document that identifies sort of the basic characteristics of the corporation. There's an application that's submitted to the state, this articles of incorporation. The state then approves and issues a charter for the business so that the business now has the legal right to conduct operations. So as we start looking at accounts, subsidiary accounts, controlling accounts, remember when we were dealing with accounts receivable or accounts payable in our sole proprietorship, we put all those in the general ledger. Well, merchandising businesses might have a whole lot of companies that they work with that would fall under that accounts payable or accounts receivable category. So when a business purchases merchandise from someone, that's a vendor, okay? And when you have lots of accounts that would fall under one category, you then create a separate ledger, okay? That's a subsidiary ledger or a sub-ledger that contains all these vendor accounts so that you can keep track of all the activity with the individual vendors, and then all of those individual vendor accounts or sub-ledger accounts, the subsidiary stuff, it feeds up into that one overarching general ledger account, okay? And that overarching account would be called the controlling account. So you're seeing an example of it here on the screen. You can see we have lots of different vendor accounts in that accounts payable ledger, and all those different vendor accounts, those are subsidiary ledgers, and they feed into then the controlling. So you can see that based on the activity in each of those different accounts, we have debits and credits, and ultimately you get one total amount of debit or credit for the accounts payable. So you're looking at, here's a subsidiary ledger form, and the way we fill it out, the vendor that we're indicating is Bearden Chemicals, and it has a credit balance of $54.83 as of November 1st. If you're looking at the subsidiary ledger form, it has all of the same column headings as our general ledger. Okay. Shows our vendor account number. Okay. So let's check in, do some auditing of our understanding. Aha, right? Primary difference between retail merchandising and wholesale merchandising. Remember the focus on who is buying the end product. So who are they, that is the business actually selling to? Retail merchandising sells to people who are using the goods or the end consumer, whereas wholesale is selling to another business. What allows a corporation to own property, incur liabilities, and enter into contracts in its own name? Remember that a corporation files articles of incorporation with the state, and they're then issued a charter, which now gives them the legal rights to operate as an individual, a separate and distinct entity. What's the principal difference between accounting records of a proprietorship versus a corporation? Remember that we're looking at ownership, and there's a big difference in ownership. Proprietorships have a single capital and drawing account. So owner's equity, single capital account, single drawing account. Corporations have capital stock, and so there's a separate account then to keep track of any earnings that are kept in the business and what's going on with the stock ownership. Relationship between a controlling account and a subsidiary ledger. Subsidiary ledger accounts equal the balance in the general ledger controlling account. So those subsidiary accounts keep track of all the different individual vendor accounts, and the total then adds up to be what is in the general ledger controlling account. All right, so what column on the general ledger form is not on the accounts payable ledger form? Remember that not on the general ledger form, debit balance. And looks like that is the end of lesson 1 for chapter 9. From here, you want to go ahead and do the forms. Go ahead and do a work together and on your own before you move on to lesson 2 for chapter 9.